In the markets, I want to start right here with this chart, which shows you how the U.S. markets closed on Friday. All of them sporting a little bit of an uptrend, a pattern of higher highs and higher lows. Curiously, the Russell 2000, the small cap index, pushed out of that, into the new high and then back down into the upward trend range. So that's the exception, that there was more selling than buying on a sort of risky area, but all of the others had buyers pushing up to new highs. So the U.S. markets finished the week on a very positive note, and they're likely to carry that on into the next week. Not only because I'm looking at this chart, but also because my favorite correlation between stocks and currencies is the Aussie yen and the NASDAQ 100. And I'm looking at this, and you can see that there's the both of them. The futures are in the green line on the top. The blue line is the Aussie yen. And then the blue shape down below is the correlation, the 3-month look back correlation of the two. You can see that in the past, there's been pretty strongly positively correlated. That's kind of normal. There are periods of times where that kind of goes out of phase, and we've had one over the past few months, especially most recently here, just over the summer. It's gone, counter trend. So NASDAQ keeps going up while Aussie yen keeps going down, or vice versa. And we saw that the past 3 weeks, where the markets right in front of the U.S. Open, the Aussie yen was trending higher and the NASDAQ was trending lower. And just now we've started to see that they're retracking and following together. And you can see this line coming up means that they're moving back out of counter correlation and into sort of a random situation where they are now. The question is, will they trend and get back into, fully heading up? That will happen if the U.S. markets are bullish and, continue to stay that way. And I think that at least, for a little period of time, they may have some sort of back and forth conflict about it. But we'll eventually get there. Now, while they're having that conflict, check out this comparison. This is the Australian dollar and the Australian dollar paired with the U.S. dollar compared to just the DXY, the U.S. dollar index. And notice on a long-term trend, the correlation is very counter negative correlation, right? In other words, if the Aussie yen's going up, the U.S. dollar index is going down, and vice versa. Okay, and that's the Aussie yen, not so much the Aussie yen all by itself, but the Aussie yen paired with the U.S. dollar. I mean, that's just a mathematical thing because the dollar's on the other side. So, of course, what's weird is they're not 100% all the time, right? Because if that's what the setup is, the Aussie, buy the Aussie, sell the U.S. dollar, they should be 100% negatively correlated all the time. But they're not. There are these periods where they run up and make this peak and then come back down and get back to their normal negative correlation. Well, right now we're on a bit of a move where we're heading up. And I'm thinking that what's going to happen here is we're probably not going to see the exact same height of it, but it'll come to some measure of peak and then turn around and get back to normal. When this happened last time, notice here, the dollar was on the rise. The dollar index all by itself was on the rise. Aussie yen was on the decline, and that peak marked the moment where it turned around. I think that we're close to a thing like that now. So what that means, you see, we've already kind of started the pattern here where the Aussie yen could begin gaining strength and the dollar could begin falling back down. Now, there's a lot of inflation concern out there in the U.S. dollar and concern about things priced in U.S. dollars going up. And so it's kind of weird that the dollar index is showing strength, because if everybody's worried about inflation, you'd think that dollar index should be weak, right? Well, I think that's coming. I think that this whole upward trend here and downward trend there is about to reverse. And if that reverses, well, then there's a good chance that we could see a couple of interesting things take place, one of which would be opportunities on the Aussie, the Aussie Australian dollar all by itself in both compared to the US dollar, as well as other pairs, specifically the euro. Let me show you what I mean. So in this chart, we see where this is the daily of the euro and the Australian dollar. And see, it had been an upward trend, meaning the euro was strong. Euro failed to make a new high, broke the trend line, and has had a steep downward move. So that's a strong move. The question is that gonna rebound? Because if the dollar's going to start getting weak, the euro might get strong, right? Except what if the Australian dollar gets stronger? And if both the euro and the Australian dollar are going to get strong in comparison to the US dollar, which one is going to get stronger? Quite possibly the Australian dollar, which would mean that this break of a trend is just the beginning. There could be a long downward trend for the Euro Aussie, at least another 100 pips just to get started, right? But let's look at the 4-hour chart and you'll see what I mean here. We've had this big move down on the 4-hour chart. And so now, if you look at the commodity channel index indicator, which is the best one for picking up early indications of divergence, right? Now, divergence, a lot of people are like, oh, divergence, that means it's a big turnaround the other way. No, it's not guaranteed. In fact, it's a little better than random whether it plays out. But that's not why you look at divergence, to get predictability. Well, the reason you look at divergence is because there's a small window where you could take a shot, and whichever way it breaks, it could be a lot bigger payoff, right? So you could have a 50-50 trade, but the payoff is bigger than 50-50 depending on which way it goes. I mean, not depending, depending on whether you are on the right side of it or not, right? So how do you get on the right side? Well, it's pretty simple. You either watch this red line and play the downside, or you watch the green line and play the upside. The average true range of the Euro Aussie on a 4-hour chart is about 40 pips. It's like 37 and change. So about 40 pips is all the stop loss you need to give it. So whichever way it breaks, you enter that way, and then you have a 40 pip stop loss, let it do its thing, and look for a 100 pip move in your favor, either up or down. As for U.S. stocks, I think starting next week, it's possible that it's going to be a good time to buy, but I don't think it's just going to go straight up and keep going. I think it's going to turn around, have a little bit of weakness, and there's going to be some good buying opportunities, and it's going to come up. If that happens, then what I think you see is that the euro will break up. The question is, will it break up strong enough to break this trend line, right? If not, if when it breaks up, it just kind of hits resistance or fails to get above this old high right here, then I think what you'll see is that it's going to come down and continue lower, and you could be looking at a target of 1.55 on the Euro Aussie. So anyway, that's my read for the weekend, and we'll try it again next weekend, see how it comes out. But if you're interested in what's going to happen, just as the U.S. stock market opens on Monday morning, New York time, then show up and we'll talk about what stock to trade.